All right, welcome back to the Nadlin Forum Podcast Daily. Ruby here, and Leo, you're on the line, right?
Yeah, good morning, good evening, wherever you guys are. Excited for this one. There's, sort of not a lot happening, huh?
Yeah, that's exactly it. Which, for mortgage rates is actually news. We're in this wild time where rates are just so calm, like nearly 3-year lows and barely moving. Bit of a snooze for traders, but super comfy for anyone thinking about a mortgage. I feel like we almost need to warn people. Don't adjust your dials. It's not your radio. It's just everything's quiet.
You know, it's all because of this government shutdown, right? It's been, 3 weeks now? Without all the regular economic reports. There's nothing for traders or analysts to really latch onto. Nobody's got fresh info about jobs, consumer spending, housing permit. So it's almost like the bond market put on its pajamas and went to bed early.
Partial darkness, someone called it. And that's not just poetic, it's practical. Rates are basically frozen because the bond market doesn't have any reason to shift. But that's not how it used to roll, hey?
Oh, for sure not. I remember back in, 2013, I was just launching a real estate tech startup. And at that time, mortgage rates were jumping all over. Like seriously, every week you check and it was a totally different world. We actually lost a client who waited from Tuesday to Friday. By the end of the week, their rate shot up, I think about 0.5%. Today, week to week, it's almost the same rate, maybe a hair lower. If anything, it's, hibernating.
Exactly. It's funny because last week we were all talking about buyers having the upper hand and market leverage shifting, right? And now the story is just market resilience, but in the most boring way possible.
That's true. And borrowers aren't complaining. It's stability we almost never see. But only because everyone's waiting for the next headline. Like, as soon as this shutdown ends, you just know there's going to be this flood of catch-up data, and then boom, volatility wakes up again.
And okay, that's the big question. What exactly are we waiting for? This week, it's all eyes on the CPI report, the Consumer Price Index, right?
Yep. Out of all the missing data, jobs, spending, CPI is like the only flashlight in a blackout. The Bureau of Labor Statistics got special permission, so we'll have fresh inflation numbers. And that's like gold for the bond market right now.
Yeah, it's the wild card. If inflation comes in on the mellow side, a soft print, as they say, rates could actually drop more, because investors would see more chance of rate cuts from the Fed. But if it jumps up even slightly, we could kiss these low rates goodbye pretty quick. And oh, that reminds me, Robert Dietz from the National Association of Home Builders was saying the exact same thing. He's like, this is the only data release that could change the mood, which honestly makes waiting feel a bit like binge watching a show and then getting hit with a random cliffhanger. Next episode, when the shutdown ends.
Yeah, it's not super fun for people who have to make real decisions. Do I close now? Do I wait? When you don't get the economic story, everyone's just sitting on their hands. But honestly, if the CPI surprises on the hot side, even by a little, the lenders could raise rates fast. We're almost playing roulette at this point, except instead of red or black, it's calm or chaos.
That's it. So anyone out there who's the type to bite their nails watching finance news, maybe hold off on cutting them, might need them by Friday. But really, I think that suspense, like the not knowing, is what makes these windows so, precious. You just can't bank on the calm lasting.
And borrowers are definitely jumping at this chance. I was just looking at some clients from Nadland Capital Group this week. They locked rates while things are quiet, even if it meant acting a little earlier than planned. Like Amy Pierce from Bank Strategic Solutions told me, she's seeing a lot of homeowners who grab this opportunity to refinance or restructure higher rate loans from earlier this year. Basically, if you waited out the storm, this is your reward, sort of.
Yeah, and I think that's why, even though we're not seeing crazy market action, there are all these little windows where smart borrowers, or just slightly lucky ones, can score a deal. Even buyers are getting a bit more breathing room with affordability, but warning, not forever. That's been a theme for us for months, hasn't it? These lulls always end.
Exactly. Don't get too cozy. The market's just waiting for that first gust of new data to shake things up. A strong CPI or any big surprise once the shutdown wraps, and we could see rates jump back toward those tougher early October highs. You almost want to ask,
Is this really the calm before the data storm? Because it feels like it. If you're thinking about refinancing or buying, maybe don't snooze on these opportunities. Seriously, if we've learned anything lately, it's that nothing quiet in this market stays quiet for long.
exactly. So, we'll keep an eye out for those reports once they start dropping, and like always, we'll be here to break it down for you.
Alrighty, that's us for today. We'll be back to decode whatever comes next. Hopefully not too much chaos, but either way, we'll be here. Lior, thanks for hanging out as always.
Always a pleasure, Ruby. Have a good one, everybody. Stay smart out there.
Catch you next time on Nadlin Forum Podcast Daily. Bye for now.